really serving a second term as president in the OPEC producer and exporter. That would have sent ripples through the oil market in a very different situation last year. But right now, the emphasis and the focus is on the economy. So perhaps we're going to see a relatively muted reaction. But that said, the geopolitics are still very important nonetheless. As I said, Ahmadinejad is a hardliner. It's likely that he's going to advance the uranium enrichment program. That may bring him into further confrontation with the West. And instead of rapprochement, we could see more tensions and less engagement, and that could really raise some of these supply concern threats. So we could possibly still, Chloe, see a geopolitical premium building in the price of oil. Remember, the mentality in the market is still quite bullish, but nonetheless, the economy is really front and center. So I'd say the geopolitics, pretty much secondary concern for the market, but still watching it quite carefully. Back to you now.
Okay, thank you very much, Srijay Garanja there. Well, let's try to get a check on oil prices and the factor of the implications of those geopolitics that Sri was talking about. Jonathan Cornfeld, Asia Director at Hudson Capital Energy. He is sitting right next to me. Well, thank you so much for coming in. Okay, just as we've been talking about all morning, the fear of geopolitics spilling onto what is happening in oil trade, actually not happening at this moment. Some profit-taking kicking in, considering this recent the run-up that we had. What do the fundamentals warrant at this moment?
Well, the fundamentals of supply and demand definitely warrant a much lower price right now, something in the low 50s.
50?
Absolutely. And at some point, there will be a bit of a pullback. It just depends on how long the paper length, the funds and the ETFs can hold the market up at this level. Because eventually, in the second half of the year and in 2010, there will be a rebalancing of supply and demand, which will cause the market to go higher. But at this point, it has been the paper length, it has been the fiscal stimulus measures pushing just cash onto the market. It has to go somewhere. It has to be invested somewhere. We've seen stocks rally. We've seen commodities rally led by crude oil. So at some point, there has to be a bit of a pullback. If you look at a chart of WTI or Brent, back at April 21st was the low point. We were around $49, and it has just been straight up since then. So from a technical level, we need a pullback. From a supply and demand level, we also need a pullback.
Right. I believe Srijay Garanja also has a question. Hey, Sri.
Thanks, Chloe. Yeah, Jonathan, I just want to talk about the supply situation out there right now, because we are still seeing this sizable inventory overhang in crude oil. But added to that, I saw some data that OPEC production has actually gone up in May by some 300,000 barrels a day, really because of the rebound in prices that we've been seeing. It's encouraged some leakage, some quota busting. Is that going to be a bearish feature in the market that it's going to have to contend with?
Well, the market has seen this all along. There's been some cheating. Ever since we broke through $55, $56, there's been cheating, and it's been known to the market, and it hasn't really had much of an effect. The real reason that OPEC comes through with these cuts is to stabilize the market and get it to slowly move higher. Now, they've satisfied that criteria, so it's not really, I wouldn't even technically call it cheating anymore, because it's basically expected by traders. It's expected by the market for them to put some more crude oil out there as we go higher. So not too much of a surprise here, and that's really not what's going to pull the market lower. I think what you might have is the funds and the ETFs that have really pushed it higher. As soon as that buying starts to slow down, then we'll see a drop. But as I said, the overall trend remains to the upside. The market will continue to move higher. We'll just see some more, maybe one or two big drops.
And Jonathan, when you look at the CFTC data, the non-commercial players are really adding a net length to this market. Does that suggest to you that the hedge funds, that the funds broadly are becoming more active participants, and we're seeing a return to speculation, perhaps not the speculative frenzy that we saw last year, but speculative activity nonetheless inflating the price of oil?
Yeah, I think, you know, if you look at the numbers off the top of my head, I think the speculative longs increased maybe 7 or 8% last week. And to call them speculators, I think, is a bit of a misnomer, because it's actually, it's funds and ETFs, as I said, and that's really people like you and me who have invested money, and also, and banks, and anyone who really wants to invest in commodities moving higher has done so, pushed it higher. There's really not this this conclave of evil speculators pushing the market up. It's really just investors who really have nowhere else to put these funds at the moment.
Ultimately, they are hedging against possible inflation that we're talking about. And also, what about this weak dollar? Of course, we're seeing a slight rebound in the dollar. The impact of the dollar.
Right, that is certainly a factor. And as crude oil has become an asset class and moved from being just a commodity and the price based just on supply and demand to being an asset class, and it reacts to dollar moves, it reacts to inflation. So therefore, there are reasons for it to go higher. The reasons are just not historic, classical reasons based on supply and demand. Now people are looking more at what's going to happen to the dollar, which it is priced in, what's going to happen to inflation.
But ultimately, as we go forward, people are looking at a weaker dollar. So
Yes.
do you see oil also, ultimately, how does that balance out?
It's going to go higher. There's no doubt that the second half of the year and in 2010, oil can really only go in one direction. We're just not going to see 150 as quickly. It's just the general trend is higher.
Okay, we'll have to leave it there.
Sure.
Thank you so much for your thoughts there. Jonathan Kornfeld from Hudson Capital Energy, and also Sri Jagaraja in the newsroom taking part in this interview. Well, despite oil prices rising nearly 50% year to date, Qantas says it'll operate daily A380 services to London and Los Angeles from Sydney by November. The carrier also says it'll expand its European and North American networks via code sharing agreements with partner airlines Iberia and American Airlines.